Hey there everybody, afternoon. Let's go ahead and take a look at what took place today. Hourly cents. We have now came back into, this is the daily fair value gap low. So let me show you on a daily chart. So we've now refilled and repriced into the low of this daily fair value gap. And you see how now we have bounced. You'll notice that we really have closed right on the equilibrium here of this fair value gap. So around that, as well as these new week opening gap areas. Back to that hourly, you'll see how we use this premium fair value gap created yesterday. So here in London, we trade up into that, creating high of day, break lower underneath this new week opening gap, as well as the midnight open. We spoke about how we would just look for continued lower prices into now this fair value gap, as well as this new week opening gap here. As we continue to work down on these lower time frames, 15-minute really shows you that setup. So right here in London, we return into this premium while also running a short-term high. So a short-term high has been cleared. We then break structure lower. Right, you can see this as a shift. So when we return into the midnight open, that's already valid. But now, like we like to classify, we get our first candle closure below this low. Here in this, when this candle breaks below that swing point. And you'll notice now how this fair value gap holds us in the New York session. While we were watching this live this morning, we spoke about how our objective would continue to be these lower prices just because, right, so far we've been clearing sell side. So after returning into a daily volume imbalance, right, hitting these new week opening gaps, once we move away from them, we're just going to look to continue for price to gravitate into the lower ones. At this point, this really is that YouTube model framework. So short-term high cleared, market structure shift with the fair value gap left behind. That's also why this here is a good short opportunity. From that fair value gap into that daily fair value gap low, and ultimately this new week opening gap here. So really going from new week opening gap into new week opening gap before bouncing, retracing really into, right, notice where we top out again, that fair value gap. As of now, just playing around those new week opening gap levels. Here on the 1 minute, this is that right after London setup. So London creates some lows that get taken out later on in the session. But here, right, the main objective was to return into this premium. So you'll see that we clear a short-term high. And then on a smaller time frame sense, we actually do it again. So we clear another short-term high, break structure now at that low. Closing below it. And now using that fair value gap left behind. All right, so we use it once, trade lower, barely sweep this low, so we create relative equal lows at this point. Retrace just back into this, right, original framework here, this YouTube model. Notice how when we do that, we now create another one. So now short-term high cleared while returning into a premium. Market structure shift lower. Fair value gap left behind. We use that to deliver us into this low now, and ultimately just into right that low of the London session. So we hit this low, we have cleared sell side, making a new low of day, and that's why we consolidate now going into New York. There was high impact news at 10, so we were waiting for that. Got on just a few minutes before, and we had seen how, right, so we were already putting in bearish order flow, trending lower, looking for lower prices, and we see how prior to now 10 o'clock, we have ran up and cleared short-term buy side. So we have cleared buy side here. Remember, this is a high time frame fair value gap, but now on a lower time frame when we refine it, right, you notice I can use this fair value gap. That's where the candle bodies hold. This wick here was another news event. So this is wicking higher. Wicks do damage, right, returning into still an original YouTube framework. Notice that. But the candle body is really telling the story. And this objective here was to run that short-term high, return into a premium, And now we break back underneath this new week opening gap. Notice how this candle perfectly respects the new week opening gap, creates a volume imbalance, and then breaks underneath the 8:30 open. Because of seeing that, we then had our attention here at this fair value gap. So we're waiting to see if 10 o'clock news wouldn't want to stab up into that one more time. Right, we did it here, institutional order flow entry drill, as we tapped the 8:30. But at 10 o'clock, we don't even want to reach into that. That was another sign that price was going to remain heavy. So with that news manipulation, we're still failing to return into that premium. So once we start breaking lower, we had spoken about how once we start closing below the new week opening gaps in here, our attention would immediately be to this new week opening gap here. So you see how, this was our last attempt to run out buy side and return into a premium. We fall short, break lower. From that point, this was all just that bearish order flow delivery that we spoke about. So if we walk through this, anytime a premium inefficiency is getting created, it's getting filled. So I notice we have a fair value gap perfectly, gets repriced and rebalanced here, breaking below new week opening gaps. Up close candles act as resistance. Notice that, that's what bearish order flow is. Once we see this candle break lower, we spoke about that immediate rebalance. So we would look to see if after tapping this candle's low, if price would now show a willingness to continue to trade lower and sell off. And you see that we get that here, So we just continue to trade lower, leaving no inefficiencies. When we create volume imbalances, notice how they get refilled, they get used, but we remain below them with the candle bodies. So just continuing to put in that bearish order flow, Volume imbalance here gets left open. We fall short of, so on this first run lower, we fall short of this daily fair value gap low. So we spoke about how this low falling short of this daily fair value gap would mean that, we would look for this fair value gap here to offer us resistance. Let me go ahead and move these quickly. Understanding that, we still had this fair value gap, that was the draw. So this low was just a fake low, going to be used as sell side liquidity. So as we return up into this fair value gap, we reprice into its high, leave it, rebalancing it, and then ultimately deliver into that daily fair value gap. We had wanted this new week opening gap low to be hit, and we leave this swing low just above it. So this whole retracement, as we were explaining, was a suspect and a fake retracement, simply returning into higher time frame premiums. So if I show you a higher time frame, we had 5 and 15 minute fair value gaps in here, as well as inversion levels that we were using, that we don't have them on the chart now. But if you look at the AM live stream, we had levels in here, a 1 minute inversion fair value gap. So price was simply returning into that premium. The candle bodies held it perfectly here. And then as we break lower underneath this inversion, we would then look for sell side to be met. So notice how once we get under this fair value gap here, creating that inversion, we use it, break lower, and from there, we got off before our sell side got met, but we pointed out this volume imbalance. That was the last thing that we had pointed out. And you see how that gets respected before ultimately we stab into that sell side and right into that new week opening gap. From there, now we would expect the true bounce and reversal. So you see how, that first bullish fair value gap that gets put in after clearing sell side and returning into that discount, that would be the entry point, simply targeting now buy side and even these new week opening gaps, because we're expecting to bounce from the new week opening gap back up into this new week opening gap here. You'll see during lunch, just that normal lunch consolidation, so just chopping back and forth. Coming out of lunch, we run down and clear this sell side liquidity. So still looking for higher prices now at this point. After seeing that run on stops, we want to see, what do we get following that? So now once we trade back above this creates the inversion. And this is a failed YouTube model, notice that? So that in itself becomes its own model. Because you can see this as a short-term high being cleared, market structure shift lower with the fair value gap. But we understand higher time frame order flow is now going to retrace because we have delivered into our sell side objectives. So this is why it's important to have a higher time frame understanding, because we're looking at this fair value gap and expecting it to be traded through and become a inversion. And you see that's what happens. right? We trade up and through it, come back down into it, even after we bounce from there. Notice how we create another little baby bullish fair value gap that gets respected. So we'll offer another opportunity here, before ultimately trading higher, clearing out buy side now, and just returning into these new week opening gaps. You'll see the afternoon offers you this little opportunity. So after 1:30, how we speak about, right, 1:30 kind of being the true open, we have that afternoon Judas swing to where we're consolidating inside the new week opening gap. We have a untouched discount here. So after 1:30, we dive down into that, into the discount. Candle bodies hold perfectly, right? Notice if I bring up the consequent encroachment, look at the bodies respecting that perfectly there. We then put in the YouTube model. So right, short-term low cleared, returning into a discount. Market structure shift here. And now we have all of these new week opening gaps that will also act as support. So very high probability setup here, just looking to go from these new week opening gap lows up into its high. Right, you can use any of them. I like how this volume imbalance is aligned with the new week opening gap low. So I look at this level here. And notice how, like I said, we go from the new week opening gap low, 519's new week opening gap low, perfectly up into its high, right? So that's what this little run was doing. Gives you multiple opportunities. So this was that YouTube model, clear cut, right? Breaker as well. Just a clean high probability entry. As we break higher, leaving now new discounts behind, we could use those. So fair value gaps here. Right, notice what this is. Short-term low cleared. Market structure shift here. In this instance, you would want to use, right, this volume imbalance. Just because the objective is the new week opening gap. So once we close above here, use the volume imbalance as support until we get into that new week opening gap. And you see how once we hit that new week opening gap, hit it once, twice, 3 times, refusing to put any candle bodies above it. Retracing lower, just back into where now? This new week opening gap. So you see how many times we're saying it, right? Price continues to reference these new week opening gap levels. On this retracement, we're just returning into this original structure here that was formed following the afternoon session. So we still find support in there. This really just consolidating using new week opening gaps as support. And we do get one more run into buy side. So we clear out buy side here and really return just into that fair value gap that we had dragged out this morning. So this news wick, right, we can see that as the rejection block. So we really just return into that there. After hitting that, we just get a retracement and sell off to now attack sell side. So a little bit of a kind of seek and destroy to close out the day. Right, to where after coming off of this low, we give a retracement, create short-term highs, come down to clear out little short-term lows, run those short-term highs out, reverse, clear out the short-term lows again, and now we just consolidate right around that new week opening gap. So not too much of a eventful day. Right, decent movement, but kind of just up and down. This here was clean, right? And this was nice to follow live to see really that delivery of that bearish order flow, leaving no inefficiencies, just following, right, the PD arrays that are being formed along the way. Also nice to see how we spoke about we didn't trust any bullish setups because we preferred that this low be ran, right, because we had this new week opening gap here. So we got to see that idea play out, right? That logic was right, just really played out as we expected. So it's nice to see that we clear that sell side, trade perfectly into that new week opening gap, and that ends up being low of day, right? So no surprise there, not random. Yeah, as of now, going into tomorrow, notice how we're really just consolidating after delivering into that daily fair value gap low. So if I clear this out, we just want to see if we don't want to continue to attack sell side liquidity. That's kind of the only thing we're looking at now. So we've hit the daily fair value gap low on an hourly sense. Notice how we still have a sliver of this hourly fair value gap left. So I want to see if price doesn't want to just gravitate into that inefficiency. Our live stream tomorrow will take place at the same time as this morning, so 9:55 Eastern. Until then, have a good night, everybody, and we'll talk in the morning. See you.